ONL stock got absolutely crushed after earnings, dropping about 30%. What's in the future of this office REIT? Hey, I'm Andreas, I've been investing for over 10 years, and in today's video let's talk about ONL. And is this a massive buying opportunity, or is it a value trap and a falling knife that you should never try to capture? Alright, let's get into some of the facts regarding this stock. Right now, as I'm talking, the market cap is about 130 million. It has fallen even further since this screenshot that I have, this frozen picture of after earning performance. So down 30% yesterday, down about 10% more today as I'm recording this video. Why did the stock drop so much? Was it warranted? What's really going on here? Well, if we take a look at the earnings call, which I listened in the entirety of, there are a few things that stick out, and once updated, it will have a massive impact on the financial models that Wall Street analysts use to justify valuations, to trade stocks, and indeed, just looking from that textbook angle, well, then the drop makes massive sense. Now, this is a stock that I like. Accumulated about 1,000 shares in this position, so it's a small, medium-ish type position in the portfolio. Now it's small now with the Porch and Palantir on. It's very small now. But I used to like the stock, and now I like it even further, despite dividend being cut from 10 cents every quarter to 2 cents every quarter. Why did they do this? Well, the answer was in the earnings call. That's just fresh off the presses in the mind, just listen in. And normally in an earnings call, let's say you're listening in on Johnson & Johnson, they tried to hide the bad things in plain sight. They will say revenue grew by 14% and we're seeing FDA approval for the latest within skincare. Oh, and by the way, we caused some cancer for babies with the diapers, and revenue is projected to continue. Well, in this case, they were hiding the good part about the earnings call in with some of the bad. And the good part was that, as the CEO mentioned, that the dividend, this capital that they get from operations, is the cheapest funding, the cheapest capital that they can get out there in the markets. And that's why they're retaining it. That's why they're being very, very careful, because they are still facing some headwind in this case. We'll talk a bit about a potential turnaround later on in the video as well. But we're seeing that, all right, they are projecting that the core FFO here, in this case, will be somewhere between 61 cents and 70 cents for the full year of 2025. So they're lowering expectations on company performance. You put this into the financial models, you project it out into the future with continued downtrend, continued decrease in growth year on year, and you get a very bad result. So this company needs to turn the numbers around. Is that doable? Well, if we take a look at some core metrics, we saw that it was 74 point something percent of the entire asset portfolio that was currently rented out. So that means that the vacancy rate is absolutely huge for this company. 1 in every 4 properties, roughly in terms of value, is not rented. On last earnings call, this was 80% that was rented out. So vacancy has increased and they have not been able to retenant this quickly. They used one example of a successful retenant here with Hasbro in this case. Well done, good job. And they also talked about pipeline for retenanting being strong. Although when the only analyst in the entire call to actually ask questions pressed the CEO about this, well, then he just started going, and didn't have anything good to say. He choked a bit on that question and did not communicate in a satisfactory way for shareholders. It was a lot of uncertainty, a lot of doubt. There was no real pointers toward this being an actual turnaround case. And you put that in contrast to the tech CEO who's able to hype people up with some new AI product or something like this and get massive funding. Well, then these value investor plays are a lot more boring. And when I listen in on the earnings call for REITs, I get the feeling that they just want it to be done and over with. It was the same with MPW when we listened in on that. Mr. J. Aldag in that case, making super quick closing remarks, closing the call almost instantly. And in this case, we're just seeing some insecurity around communication. And that's not a good sign. It's spreading further uncertainty in the market, in the mind of investors. And if there's one thing that we investors hate, it's uncertainty. We gotta have clear communication. We also saw a very important slide regarding balance sheet strategy. We didn't see it. We got this printed after. They don't have any video on the calls. They just do audio, these REITs. Very stark contrast indeed. Anyways, we're seeing the maturity of the debts that are coming up. So we're seeing that there's substantially more debt in 2026 and 2027. And the company is already preparing for this by limiting dividend, slashing it from the 10 cents to the 2 cents. Very bad indeed. And we're also seeing the total principal outstanding here with the weighted interest rate of 5.73%. And this is slightly lower than current market rates for refinancing on corporate bonds. So if they are to refinance, they will indeed get higher rates on this. And from a business perspective, it makes more sense to use the cheap capital that would be paid out for dividends to refinance, to push out maturity here until later dates. In the case of ONL, we can see that just the balance sheet, indeed, in this case, the amount of value that they have in their portfolio with joint ventures, with properties, it doesn't really make sense when we compare it to the valuation. I encourage you to take a look at the balance sheet, in this case, take a look at the assets and put that in contrast with the debt. There's quite a lot of equity for shareholders and not a lot of debt. This ratio is a lot more conservative than other property companies and other REITs. And then you put the balance sheet into contrast with the valuation that we saw earlier today. Just update this, Orion Office REIT, ONL, they're changing the name by the way. But look at market cap, and then I want you to compare this with the amount of assets that they have on the balance sheet. You can also, look at the expected amortization and depreciation here, because they are writing down the value. Take that into account as well, just write down the value even further. And then tell me in the comments, do you think it makes sense that a company with this type of balance sheet, with these assets, with this core FFO from operations expected, is trading at current levels? It doesn't make sense to me. I thought they were cheap to begin with. I thought that, all right, they've been spun off from O. Somehow people, they log into their brokerage account, they see, what's this strange stock doing here? They just sell it, they just dump it in the voting machine that is the short term of the stock market. That's going to create a lot of selling pressure. All right, I think a lot of the decline in share price has been due to that. And then we will also see some poor performance that has increased sales. But this company, it's almost priced as if it's about to go bankrupt. And when I look at the numbers, I don't see a company that's close to bankruptcy. I see a company with a conservative balance sheet for being in the property sector, holding a bunch of assets that no one wants, office buildings. This is way out of favor right now. No one wants this. The investors are dumping it. I look at the numbers from operations, still making cash flow. Conservative debt. What's really going on here? Why is this stock so cheap? And I think the answer in this case is that a company this tiny, 130 million, something like this in market cap, as I'm recording this video, one analyst on the call asking questions, no one cares about this company. No one's there covering it, no one's there following it. Larger investors who got this from the O spin-off have just dumped it. It's this unwanted asset that people have just dumped. And I don't think that the valuation makes sense. I think that this is very cheap. I think that this stock is one that I will put a lot more focus into on the dividend portfolio that I have right now. I was gonna buy 1,000 shares, then be happy with it, collect $100 every quarter in dividend from that, from previous levels. But now, with this massive sell-off, this massive dip, I'm at least gonna buy 3,000 shares more into this company. Load up. What do I think will happen in the future regarding performance? Don't expect growth stock performance from this company. It's not gonna be another Porch Group, Reddit, SoFi, Palantir. None of that here. I expect over performance, so slightly above market returns. And I expect this to be a more stable dividend player in the future. And I expect to collect a very nice cost on yield dividend from this company going forward into 2027. That's when I expect that, all right, I'm gonna have an amazing yield on cost in this case. So it's a bit of a longer play. I don't think that we're gonna see dividends hiked in 2025 again, just restricted. And if we look at the maturity of the debt that was earlier on the slide, we can see that, all right, most of it is coming due in 2026 and 2027. Let's see where we have that slide. You saw it earlier in the video. You can go back into it and look at it, see where the maturity is. And I think that once this is refinanced, then we're gonna see dividend increases again. And I expect that to be perhaps early 2027. Then I expect a nice, juicy dividend and appreciation of capital gains as well, just like we've seen with MPW. Remember when I talked about that stock when it was down in the low 3s, in the 4s? Well, look at it now. These unwanted property companies, I think, is one of the sectors with the greatest potential right now. But hey, that's just my opinion. Could be wrong. Let me know in the comments below if you have a different opinion. What do you think about the valuation? That's been it for this video. And as always, hope you guys make a ton of money, whatever investments you decide to make. Take care now. Bye bye.